Ladies and gentlemen, on this YouTube channel over the past year and a half, basically, I have been making price targets for the current bull market that we're seeing. Those price targets ultimately came from extrapolations of micro trends within the 4-year cycle, and so they do heavily rely on the 4-year cycle, which brings us to a problem with the price targets, which I'll discuss in the second half of the video. Please, please, please stay around for the second half of the video. Do not just take my words for gospel. In the first half, I'll be discussing price targets again in the first half of the video based on the 4-year cycle, but in the second half of the video, we need to discuss the 4-year cycle's validity as a whole, which does affect those price targets. So that's why today I'm saying price targets. I'm not saying my predictions, which I'm resting everything on and gambling my life for. No, I'm saying price targets based on mathematical trends. They are still very useful though. And look, in the past, going back from December 2022, just 1 month after the bottom, guys, when everyone was saying that we would go lower on Bitcoin, I was making price targets for the current bull market based on the bottom price that we saw at 15K, right? Based on those formulas that I had in the past that you've probably seen videos on. If you're old to the channel, if you're new to the channel, you don't worry about it. I'll just tell you what the targets were. I made 3 or 4 separate formulas using micro trends within the 4-year cycle, which is an overarching date range trend on Bitcoin triggered by the halving. Everyone knows what it is by now. And those targets basically took us to around $103,000 to $197,000 within this bull market. And obviously, as per 4-year cycle, the date range top would be around October 2025. Okay, that's what the historical trends suggest. They suggest a top in October 2025. Again, we'll discuss the validity of that in the second half of the video. But I'm talking about price today, not necessarily date. So in terms of price, I utilized those old formulas, which have been updated now because we've seen the halving and we've seen the price that Bitcoin was at the halving, and they predicted 103 to 197K, right? Now, we've seen the halving price now. We've seen the data point, which is the halving, which I used as one of the fundamental data points to coming to a conclusion with my mathematical formulas that I created. Now that we've seen the price of the halving, we don't even need to speculate about the price of the halving anymore. We can just plug in the actual price of the halving into our existing formulas and create a new formula. So right now I have 3 formulas, right? I have one here, one here, one here, right? 3 formulas in blue boxes. And I have the green formula. By the way, I just wanted to show you this, which actually shows you that one of my main formulas that I created in December 2022 literally predicted the halving price, right? I just thought this is interesting just to show you. In December 2022, you can go back and watch a video on it. I made it there. I took the data from bottom to peak before halving. I extrapolated the percentage decrease onto a speculative current data point. I added that price to the bottom, which is 312%. So the bottom's at 15K, added 312% to 15K. It took us to 63.7K. Guys, the price of the halving was 63.2K. We were only 500 USD off a halving prediction, the price of the Bitcoin halving, that we made like 18 months before the halving or 14 months before the halving. So we were ridiculously accurate in just predicting the halving price. Now, I'm not going to act like I was treating that as gospel. It's just very interesting. It shows you that these formulas actually can have a degree of accuracy that's quite high. Literally, one of the formulas that I'm using here predicted the halving price when Bitcoin was at 15K or 16K. I made this formula, and it predicted a 63.7K halving price. We saw a 63.2K halving price. Very, very accurate there. So I'm just going to leave it there for now. I'll move it above, but now we're going to get into the formulas that predicted the top price, okay? So I've only got 2 formulas here which predict the top price on Bitcoin. I'm sure there's many more I could scrape up, but these ones I think are too fundamental to skip on, and I think they cover a very nice price range that leaves in room for error, a comfortable room for error given the lack of reliability of these formulas. Although they are reliable enough to give us a rough guideline, as I said, they're nothing to put your life on. So here, Formula 1, we've got the pre-halving peak to the top in 2016, 2020. We've taken the pre-halving peak to top in 2016 and 2020, compared the two, notified or noted the percentage decrease between them. It was an 84% decrease. So we've taken the 395 from 2020, and we've assumed that the 84% decrease would occur again. That leads us to a number which is 63. So we've taken the 63,000, which was the halving price. We've added 63% to that. That takes us to 103K, which means that our speculated top price for this cycle would be about 103,000 USD. All right. Then we've got our second formula here, which is a little bit more optimistic. So it's halving to top prices, not the pre-halving peak, but the halving itself to top prices in 3 separate data points. So a little bit more reliable here. 2012, 2016, 2020. And then we've got, as you can see, 9,400, we had a 68% decrease into 2016. We had a 78% decrease into 2020. And if we're assuming that we're going to see a decrease of 68% again, it will take us to 196K, but we're changing that this time around, right? Now we're assuming we're going to see a 68% decrease, just like the 78% decrease, just like the last cycle, which brings us to 143% gain, okay? So let's go ahead and change that up. Therefore, as you can see down the bottom here, a halving price of 63,000 brings us to a 143% gain from the halving, brings us to a 155K top, okay? So hopefully that makes sense to you guys, but basically I've got two formulas. I've played around with many other different formulas before. Ultimately, it gives me vague prices, like it throws me in the very optimistic price regions like 300K, 400K, all these things which we can invalidate by other methods. And then I've got another couple of formulas which I found that actually throw us into the same vague price region here, but I think they have pretty hit or miss reliability. These two formulas here I think have the most reliability, and with that said, Formula 1 only has 2 data points. So Formula 2 realistically is the most reliable formula here. And even with Formula 2, we don't really have that much reliability because we're just randomly kind of arbitrarily picking the 78% decrease from last cycle instead of the 68% decrease from 2016. So there's a lot of room for error here, right? And that's why I've purposely chosen two formulas which have pretty different price targets. We've got the overall top target using these two formulas being 103K to 155K. There's just so much room for error within these formulas. It's very hard to come to a concrete price target. But what I can say is this. Out of all the formulas I've looked at, and not just formulas, you know, not just regular mathematical formulas, but also analysis indicators, all these kind of things. Out of all of them I looked at, very few give a price target over 200K. The vast majority that I've looked at give a price target under 200,000, and the vast majority give a price target above 100,000. So you're looking at that 100K to 200K range, and I've tried to narrow it down to the best of my ability here. It's 103K to 155K. It's still very vague. And even within this vague target, there's room for error. And here's where we get into the something that might bum you out a little bit more. The 4-year cycle itself is not as strong as it once was. Okay. Not that it's not as strong as it once was, it's certainly still valid, because the only way to invalidate it is to see a top that is very clearly not within the bounds of 4-year cycle in October 2025. That's the only way you can invalidate the 4-year cycle, because the 4-year cycle is actually a date range trend. We get date range targets out of the 4-year cycle. This is the first time I've ever tried to make price projections based on 4-year cycle, and as you can see, we just simply don't have much data to do that, even now. So that's why I'm not really calling them predictions, because they're not predictions. They're way too vague to be predictions. They're just projections, and they're just analytical. Really, it's just interesting. That's all it really is. But yeah, we don't really know what's going on with the 4-year cycle. And the reason I say that is because we've moved a little bit faster than expected here. And, you know, let me just explain it. I mean, we've got a chart on the screen here. You see the month. This is a monthly chart, but monthly chart RSI level. And what you can see is that basically this line on the RSI at 66, this yellow line, lines up with a very important price line on the price chart, okay? As you can see, whenever we've rejected from 66 on the monthly chart RSI, we've also rejected from this price line on the cyclical kind of rejection level, which is a neckline that divides the bull market from the bear market in every single cycle. So that line, that yellow line on the screen, in each of these cycles, here, it's very much significant. It's very much cyclically significant, and it lines up with the monthly candle levels as well on the RSI. So historically, we've seen pre-halving corrections from that point. We've seen testing that yellow line, that neckline, then rejected downwards from both the neckline and the price chart and on the RSI, and then only a few months later, we've broken above the neckline and headed to all-time highs shortly after that. But instead of doing what we've regularly done, which is what I just explained, we've just gone ahead and not seen a rejection at all and just breached it about 200 days earlier than expected, right? So in 2015, for example, it took us 1,100 days from all-time high to break that all-time high. Same story in 2019, 2020, and this time it's taken 850 days. So again, we've breached all-time highs on Bitcoin about 250 days earlier than expected. That's not really good, because although it's good for our portfolios in the short term, we've reaped a lot of reward from that. Everyone who's had crypto for the last year is up significantly. It's not good cyclically, because it means we lose that cyclical predictability, and it means that predictive methods like the one I've just shown you here, these speculative projections become less reliable, because these projections are obviously based on micro trends that stem from the 4-year cycle theory. And given that the micro trends that stem from the 4-year cycle theory are at risk now because the 4-year cycle itself is being deviated from preliminarily, it adds an extra degree of doubt into the already very doubtful projections that we have here today. So that's why I'm not really confident of I actually was considering not making this video, because I just really don't want my name attached to these price targets, because I just really don't have any confidence in them whatsoever. I don't have confidence in the way I've got to them because of what's going on in the market right now with the deviations, and also because of just how vague the data is. I do think the price targets themselves are reasonable. I think 103 to 155k is reasonable. I think it's a reasonable target, but I don't really have a huge amount of data to support it. Right now, what I'm really showing you here today is just something that I'm finding interesting, something that perhaps a lot of people wanted me to talk about, but it's not something that I'm, again, writing my life on at all here. These targets are only really valid if we see a traditional 4-year cycle top, and that's very much a doubt. There's very much a growing pool of data to suggest that Bitcoin will top out earlier than October 2025, and even to suggest that Bitcoin could be breaking the 4-year cycle altogether and entering a completely new phase, right? A phase in which we don't see these regular 4-year bull market, 4-year bear markets, a phase in which we might see a bull market the last 6 months, and then a bear market the last 10 months, and then a bull market the last 2 years, and then, we don't really know what's going to happen next. We're really very much in the dark here cyclically for Bitcoin. But just to make it very clear, the reason I brought it up here today, these projections, is because, first of all, I said I would when we saw the halving. Second of all, the 4-year cycle is not broken yet, okay? Although we've got doubts about it, and although it is being tested and challenged, it's not broken yet. And so it is still important to hold some degree of weight to it and still mention when significant developments in formulas we have based on the 4-year cycle do crack open. We've just seen that today. So based on the 4-year cycle, my top target for this bull market is 103 to 155k, but I'm not confident in that because I'm not really confident that the 4-year cycle itself is intact here. We'll have to just wait and see. That's very much the memo of this cycle so far. I say it time and time again. I try to say it every single video to remind people. This cycle is very much a reactive cycle rather than a predictive cycle. I don't think this is a cycle in which we should be too concerned about price predictions. It's a cycle in which we really need to be focused on reacting to what occurs, because we do have TA, right? And TA does tell us if X happens, Y will happen. TA is very good at that. But TA is actually surprisingly not too good at telling us where exactly this asset will go if this happens. It's very good at telling us what we need to be doing in certain situations and how we should be reacting to those situations, not necessarily what will happen. And that's something a lot of people who are new to TA get confused about. TA is not this crystal ball that tells you exactly where Bitcoin's going in 2 years from now. TA is a tool that traders use to navigate the currents of the market and put themselves in a best possible position to profit in cases in which it's profitable, or lose as little as possible in cases of which it is not profitable. That's what TA is. It's a tool for reactions. It's a very unsteady tool when it comes to predictions, but I've tried my best here today, so I hope you find it useful. I won't ramble anymore. Thank you for watching, guys. I hope you enjoyed, and I'll catch you in the next one. But before we end the video, BingX and BitGet exchanges, very good exchanges, very low trading fees, never been hacked before. My referral links are down below for 15% trading fee discounts on these exchanges, and an exclusive reward center on both BitGet and BingX for thousands of US dollars in rewards for free if you do various tasks. So go ahead and check that out with my referral links below. Crypto Academy, bull market sale. If you want to become a trader, you want to learn how to trade, you can do that with the Crypto Academy. Again, we've got a bull market sale, so now is the time to do it. Check out the website down below and you'll find all the information. And then finally, if you want to trade altcoins with me on Telegram, I have a paid group, a VIP group on Telegram with a 77.5% win rate, which is pretty good, guys. So check it out. Want to trade altcoins with me there? All the information is on Telegram. All the information is down below. Use the links. Guys, thanks for watching. Hope you enjoyed. I'll catch you tomorrow.